Hello everyone, I'm Dr. Stock, and in this video we're taking a look at the markets to see how it performed this past week, and we're also taking a look ahead to see how it might perform going into next week, and also what we got from GDP and also personal income and outlays that kind of might shed a little bit of light on what we're seeing and how long we can expect it to keep going. So that's what I have for you in this video. Also in this video, down in the description, you can find this link for Moomoo. By clicking that link, signing up and depositing $100 or more, you can get up to 15 free stocks using my link. And so $100 or more gets you 5 free stocks and access to their free premium courses. $1,000 or more gets you 15 free stocks, each valued up to $2,000 a piece, and still access to those free premium courses. So check out that offer by choosing that link down in the description. If you also want to support this channel, you can find my Patreon down in the description there as well. You get access to my Patreon exclusive content as well as access to my private Discord. Come on over and be part of the community. We'd absolutely love to have you over there. With that said, let's get right into GDP and then we'll move on to the markets. So for GDP, there we go. I think this is a good first screen to look at here. So last quarter we had 2.6%. This quarter we have right here, you can see in the middle it says 1.1%. And the last that I spoke about this, the Fed's GDP Now tool said 2.5% was the estimate, and we fell very much shy of that. And why I like this table is it breaks GDP down for us. So the orange candle shows that 1.1% that it came in. Actually, it was, I think 1.05, rounds up to 1.1. Not a big deal, but that's not a lot of growth. And also, it's a little bit deceptive to look at the 1.1% because it's actually only a fourth of that for the quarter. So I'll talk about that when I show the spreadsheet. And this is really what you have to pay attention to, this part of it for consumer spending. Consumer spending is absolutely the largest part of GDP. It's nearly 70% of US GDP. And so that is going to be critical for us if we're going to continue to stave off a recession, stay out of it. You can see we can't count too much on exports, federal government spending, state and local, business investment, housing, imports, investment inventories, a huge drag on us. The only thing that saved us was that consumer spending. So that means for the next few quarters, quarter 2, quarter 3, quarter 4, we need to see that strength come through for consumer spending to stay positive for GDP. So that is big for us. I think it's also noteworthy when you read the notes that go along with it. The increase in consumer spending reflected increases in both goods, led by motor vehicles and parts, and services led by healthcare, food services, and accommodations. So that's something to really pay attention to as we look ahead to see as we get different reports coming out when we find out news from motor vehicle sales, also the parts that we have and services information such as in our inflation reports. Those are things to look at to give us better indicators as we look ahead to other GDP reports that we're going to get. So let me move on from there into personal income and outlays, and I'll zoom in here. So personal income at 0.3% month over month, not too bad, that's about right. And then we have a personal disposable income, disposable personal income, there we go, if I say it in the right order. And in chain dollars, what we want to look at, 0.3%. And then PCE, we want to come down here to the index values that we have, 0.1%, where we had a trade-off between food was up quite a bit, but energy was down quite a bit. And so energy kind of brought that down a little bit more for us. But when we go to core, you can see besides January, we've been floating around that between 0.2 to 0.4, with the 0.3s coming right in the middle, and that January seeming to be a one-off. As you look down through these metrics, all of these columns that seem to be really wacky when we look at those. March, we had a huge drop-off, 5.1 down to 4.2. So this was a decent PCE read that we have. Now, if we come down to personal outlays, as they mentioned it down here, personal saving $1 trillion. How meaningful is that? We'll take a look at that in just a moment. And then when we look at the personal savings rate that we have, it was 5.1%. That is up significantly. So here I have the personal savings, and we can make this zoom out to see personal savings over time. And you can see we're getting pretty close to about the midpoint of where we were at prior to the Great Recession and then leading up to the pandemic, where we actually had about $1.5 to $2 trillion in personal savings. So that coming back up, good for us. Personal savings rate of 5.1%. And I'll zoom out on this a little bit more so we can see more of that as well. You can see we're getting close to, but not quite back to where we were prior to the pandemic in the years, again, between the Great Recession and the pandemic itself. So we want to be looking for that to climb back up to that 6 to 8% range. And we are getting close to that. It is noteworthy to see that we have a little bit of concavity switch here. It is somewhat sort of concave down, but we have a little bit of acceleration coming off the end. So it is possible that personal savings would be picking up a little bit, at least from what we had. I think it's more likely that personal savings starts to level off and that we don't see such a big jump moving into April. So then we also have real disposable income, and you can see this as a percentage is getting pretty normal. We don't have those spikes that we had following the pandemic. These spikes are now starting to normalize a little bit more to be more of the typical range. That's not bad for us. And then I think it's finally worth a mention to look at the CME FedWatch tool. 25 basis points, I think, is pretty much a given at this point in time. I don't think that we've seen anything that will change the Fed's mind from doing a 25 BP hike coming up in May. That's this coming week for us, and I'll do a separate video on that one. So that's 82% chance, and let's just go to December to see where that puts us. We look at December, most likely right now the market has priced in almost even between 4.25 and 450, up to 4.5 to 4.75 for the federal funds rate. So it is still pricing in some price cuts at this point in time. We're going to have to see. The Fed, as of right now, saying that there are no rate cuts coming for 2023, and that would actually drag on the market a little bit. Now, for the part that you've been waiting for the market itself, I was taking a look at this, and I still do believe that it's quite possible that we actually do see a recession and we actually do pull back in the markets. I just don't know that it's coming yet. As a matter of fact, I think the way the market is setting itself up right now, especially when we look at QQQ, which tracks the NASDAQ 100, I think we're actually in a really favorable position to make another significant climb from where we stand right now. So let me get over to that as promised. Pop that down, and so here we are in Mumu. Let me scroll across and check this out. So when you look at it, like, hey, well, we leveled off, but you can see that we broke up recently. That's not too bad. Well, let me zoom in a little bit more. This shelf that we had right at about 321, 320, 321, we actually closed up above that. And that's important to us because what that means is for the first time in a while, going all the way back to March 31st, we finally have a clear higher high. And if you check out our RSI, we're still climbing. We still have bullish momentum going on this thing right now. It is possible that we do experience a weakness and fall short of that. And then what we end up having is a rise in the price of the QQQ. And we also have a fall in the momentum. And if that would fall to bearish territory while the price still rises, that could be significant evidence of bearish divergence where that could fall. I don't think that happens in the near term. We're going to have to wait and see. But let me put the drawings up here. I shared this over in my Discord, which you can access the Patreon through the description. I believe I already mentioned that. So take a look at this. So this dark blue line that you see right here, and the fact that we're up above that resistance, that's what we had to break in order to have room to get up to this previous high that we had at $332.50. So that we haven't seen that high since August. So let me zoom out a little bit so we can see a little bit more of that. There we go. Over here is the next really big area of resistance that we get right around 330, 332, retesting that previous peak. And it's important to see if we just bounce off of that and start tumbling back down and retest some of the supports that we have, or if we keep going. Now, we do also have possibly this bullish wedge taking place that we see right here. And it's not perfect, but it does tell us a little bit that possibly we only see about 2% until a little bit of minor resistance, or possibly that we run all the way up. Honestly, breaking up above this line, if we have a full candle up above this now support line when the market opens on Monday, and we still get significant upside throughout the week, I think that we have a clear shot moving back up to that 332 level in the near term. And I do have the supports on here just in case we're going to come down to the downside of this. Now, I did share this before resistance was firmly broken, so that's something to also make note of, that when I shared that out. And like I said, if you're one of the community members, you could see that over in the Discord. But in any case, so about 2% we have to gain up to about where we have this diagonal line of resistance, but I think the big line of resistance is 332. I did mention in one of my previous videos that household debt and credit, the quarterly report coming to us from the New York Fed, comes out on May the 9th, and you can actually see that on their calendar on my video. I do want to let you know that they have updated that to be May the 15th, so that actually delays it, puts it into the next trading week. So that kind of pushes that down the road a little bit. I think that's going to be an important report for us to tell us more about the consumer, because remember, for GDP, the market has to stay strong in order for us to avoid that recession. So I do want to point out that I think it's highly possible that in the next week or so that we do end up retesting this high, and then we're going to have to see what the market does from that point in time. If it continues to stay bullish and push right on past that and give us a new higher high. If it does, we have room up to about 337 till we get to one area, and then 345. So I mean, there really is room to climb, and maybe we do see that. I do think that there is a time where we're going to get a significant pullback coming from that, just so the bulls can rest a little bit and that the bears can have a little bit of fun in the meantime. The last thing that I want to share with you, and I had this in one of my previous videos, is my GDP projection. So this spreadsheet has been updated with the most recent numbers. So 2022 Q4, that's the most recent number. And then 2023 Q1, actually take away the fact that that's an estimate, because it's not an estimate anymore. That's the actual value, at least that we have in the advanced estimate. So these are no longer my estimated values that I calculated. Instead, these are the values that we have coming from BEA themselves, the Bureau of Economic Analysis. There we go. I think I have them all updated. So there's that number. And you can see instead of 1.1% for quarter one, instead it's 0.26. And that's because the 1.1% is actually divided by 4 and shows you this value. Actually, I have that backwards. What you do is you take this number, divide by that number, subtract 1. That gives you this approximate 0.26. And when you multiply that by 4, that's where your 1.1 comes from. And that's also a rounded value. So I can show that over here just so you can see how that works out. So equals this number times 4. There you go. And if we turn that into a percentage, there's your 0.1, there's your 1%, and now it's 1.1%. So that's exactly how they calculated that value. So they report it to you. They actually do it on a sort of annualized basis, if you will. Now, some of these other values, just in case you haven't seen my other videos on GDP, this comes in with the Summer of Economic Projections from the Fed with what they have. And it'll be interesting when June comes out to update these numbers and see what that means for us. Now, with this number coming in much lower than what the Fed expected, that means we don't really have much growth if we hit the SEP median estimate for GDP for the year. Pretty much no growth, but we also don't have any contraction, so that's very stagnant for us. And if we have the low estimate, if we hit that, then we see a little bit of contraction. Remember, it doesn't happen linearly. It would happen sort of quickly at first, and then it would decelerate from there and then turn back around to growth eventually. And then you can see for the other cases that I have on here that GDP would go positive, and that would actually be very significant for us. We'd actually have some pretty decent growth coming out if those are the numbers that we actually hit. So we'll have to watch and see if we hit those high sides of that. If you like the commentary, check out that link for the Patreon down in the description. We'd absolutely love to have you over there as part of the community. Come on over, chat with me in the Discord. You can also get access to my Patreon exclusives, including spreadsheets like this. I have my Tesla earnings projection over there and other reports that I tend to project or forecast, as well as some other commentary that doesn't make it to YouTube, and you also get more timely information. And then there's also that link from Moomoo down in the description. Click the link, sign up, deposit your cash, and get those free stocks. Thank you guys for watching this video. If you like what I had to say, that like button is right there for you. If you want to subscribe to the channel, there's a button for that as well. And if you want to see anytime that my videos come out, make sure you ring that notification bell. I am Dr. Stock, Doctor of Education. We'll see you in the next video.